Hello guys, it's Max here from Daily Market Movements and welcome to the second video with regards to the top 5 trading indicators that you guys should know in order to become a successful and profitable day trader. So in the first video I covered the support and resistance levels, so if you haven't had a chance yet to watch that video, then please go onto my YouTube channel and you should be able to find it there. But for this video, we're going to be taking it a little step further and we are going to be looking at also one of the most basic and simple trading indicators that you can use so that you can predict where the market's going to go to next, and also help you to know where to place trades and where to close them. And it is uptrends and downtrends, so trends in the markets. So this is really useful to use on a daily basis, as markets are always in a trend, whether they're flat, whether they're going down, or whether they're going up. They're normally in a channel which you can use to your advantage to then profit from. So very simple. I'm going to take you over to the charts now and I'm going to basically help you and show you how to identify a potential uptrend or downtrend in the live charts and how you can use it to your advantage. So just come with me and I'm going to take you to the live charts now. So guys, here we are on the live charts, and in front of me is the Nasdaq 100 futures chart, where I'm about to draw a live example of what a uptrend and a downtrend in the market is and how to identify it. But before I do that, I'm just going to go back to basics and explain a little bit of the theory behind what an uptrend and downtrend is. So for an example, I'm going to create my own stock price. So imagine that this was a forex pair or a commodity price. And as you can see, the market's just very volatile, going up and down. However, overall, it is just heading downwards. Okay, so this is a great example. So here we have the stock price, as I mentioned before, very choppy, but overall we have moved to the downside. Well, to identify where an uptrend and a downtrend is in this graph, you would simply just use the same strategy that I used when I'm drawing the support and resistance in my previous video, and you would find the bottom of that market but at a slight angle. So as you can see, the market here has created what we would call a lower low and a lower high. So what is a lower low and a lower high? Well, I'm going to show you right now. So as you can see, the market has kind of bounced off. Oh sorry, let me just get to my circle. Here we go. There we go. So as you can see, the market has kind of bounced off this area here, and then a little bit lower we've kind of also bounced off the this line here, and these are called lower lows due to the fact this is how low the market went, and then again we hit it again. So we every time we are creating a lower low. It's as simple as that. Here's another one, and then finally here is another one. So this, as you can probably tell, indicates that we are in a downtrend. So this is the bottom of the downtrend, this black line, where we've created lower lows in the market. And now I'm going to show you what the top side of the downtrend would look like. So as you can see, this is a perfect example of a downtrend, as we've also created lower highs. So if this was our first high, as you can see there, and then I'm just going to put a circle on our second lower high, and this would indicate that the market is in a downtrend moving to the downside. And then to the upside, it's very similar. So I'm just going to do a quick example for an uptrend now that I've just shown you what a downtrend is. So let's say this is the stock market, this is a stock price of a certain asset, and as you can see, very choppy trading, but overall we are grinding our way to the upside. So it's just like the lower lows and the lower highs that I explained. However, with an uptrend, it's actually the opposite. So you get higher lows and higher highs, and this means that the market is actually moving in favor to the upside. So now I'm just going to identify the bottom of the uptrend. So as you can see, this would be the bottom of the uptrend due to the fact we have created lower highs. Sorry, higher lows. So here is the first higher low. There you go, and then we bounced off it once again there for a second time, and then a third time and a fourth time. I'll just highlight it on the graph, as I'm showing you. There we go. So here we have created 4 higher lows, and now I'm just going to identify quickly where the top end of the uptrend would be, and I would draw it there. And there you go. It is as simple as that. You have the higher lows and the higher highs, which then indicates that this is a market which has been free to move within this channel, but overall in an uptrend. It's really as simple as that. So what I'm going to do now, I'm just going to get rid of all of this, and I'm going to take you back to the Nasdaq 100 graph, as you can see in front of me. So this is an indice. So this is 100 technology stocks in the US combined into one portfolio, which is also known as a indice, and it's just basically the moving average of 100 stocks. And I love the Nasdaq 100 due to the fact almost most of the time it moves in a long-term trend. So as you can see, this is dating all the way back to October 2019. Just before I start, guys, if you are looking for somewhere where you can draw charts, then please do feel free to visit our website www.dailymarketmovements.com, where you can then visit the charts page, where you can then bring up any chart that you'd like, and you have this amazing toolkit on the left hand side which you can use to draw these charts. So in front of me is a Nasdaq 100, and dating back to October 2019, we have been in a beautiful uptrend. As I mentioned before, the Nasdaq 100 is known for having these nice long uptrends or downtrends, so I really like trading the Nasdaq 100. So to start here, as you can see, you can identify that a nice uptrend has taken part for about a 6-month period from October up until mid-February / March. So this would be the bottom of the uptrend, and now I'm going to draw the top of the uptrend. There we go. So now we've got a nice equal channel where the price has been free to move within this slanted channel. However, the end result is that the market has actually moved upwards. So just as I mentioned, just as when I just drew you those lower highs and higher lows, we have the exact same examples here. So here we had that was the first low that we had in the uptrend, and then as you can see here, we created a higher low, which is a bullish start. That is a bullish signal that the market is ready to go higher. And then we had the exact same here again. We created a higher low. There we go. And then up here we created a much higher high. We didn't really come into contact much with the top of this uptrend. As you can see, it stayed relatively close to the bottom of it, but we still grinded higher. Why are uptrends and downtrends important to know about in trading? Because as you can see here, just like the support and resistance levels, when the market price tends to snap out of this trend. So for example, we've been in an uptrend here, and as you can see, we got some price movement here. I'll just draw it on the chart. I'll just give it a circle. We snapped below the bottom of this uptrend, snapping the trend, which is basically considered to be a trend changer from a trading perspective. And this then gives you the opportunity to short the market. So I've circled on the graph now where we snapped out of this uptrend, and now this would then give you the opportunity to place some sales. So I'm going to put a green line here where you would then, I'm going to put a blue line here where you could potentially open a sell trade, and you would put your stop loss so back above the trend, so with a red line. There you go. And as you can see now, towards the downside, we have now formed another trend, which is like a downtrend. So I'm going to just draw the graphs here. This is the downtrend that we've been in. This is a very steep downtrend due to the coronavirus pandemic, but there you go. We formed another downtrend, and it's the exact same as on the way up as on the way down. However, we just changed the words about ever so slightly. So here we created a lower high to the price that we were trading at back up here, and then once again we created another lower high here and another lower high here. And then equally we also created many lower lows as well, as you can see here and as you can see here. It's as simple as that. However, as you've probably realized, we then snapped out of a downtrend because we broke above the top side of the downtrend, which is a very bullish signal, meaning that the market probably wants to go higher. And as you can see, since then we have formed another simple uptrend pattern which traders can use to their advantage. And there we go. So many traders, when it snapped out of this downtrend that we were trading in for a month or so, would have taken this as a bullish example, and also that would have also indicated them that maybe this signal that they took back up here, the original signal, they would have been able to take profit. So you know, they would have taken profit around about this price here, which I'll put in green. And then once it did clearly snap out of the downtrend, they would have been able to place another trade, which I'm going to put in blue, with their stop loss back within the downtrend, which I'll put in red. And then they would have targeted, you know, the top of this uptrend. You know, it still hasn't snapped out of this uptrend. We are still in a nice, wonderful uptrend, but you know, that is a lot of profit. And this is a very basic strategy that all traders should know. You know, here once again we created a higher low, as I'm just going to highlight quickly in the graphs, and there's another higher low. And then we also created another higher high, as you can see here, which is considered to be bullish, a bullish signal which should send the market higher. It is as simple as that with trading. You should always look for patterns like this. So that is it for downtrends and uptrends. As I mentioned before, it's an incredibly simple and basic concept to get your head around. You know, some of the most successful and most profitable traders in the world use this on a daily basis to analyze the markets and help use it to their advantage to profit on the stock market on a daily basis. So for the third video, I'm going to be looking at the RSI. For those who don't know what the RSI stands for, it stands for Relative Strength Index. It helps you understand whether a stock or a commodity or a forex pair is overbought or oversold. And you know, it's really interesting to understand, and it can help you learn how to get into the market at the correct time. So the video is here. Click on this video right now to go and see the third video where I explain how to use an RSI. But thank you very much for watching this video, guys. Please subscribe and give this video a thumbs up.